If you have no credit history, here is the first thing I want you to know. You are not behind. You are exactly where the system says everyone starts. The credit bureaus do not have a file on you yet because you have never had a reason to need one. That is not a flaw. That is a starting line. 12 months from today, with the right moves, you can have a credit score in the high 600s and access to the kind of credit products that build real wealth over time. I spent over 20 years in banking, across major banks, regional banks, community banks, and a credit union, as a branch manager and a district manager. In that time, I sat across from a lot of people who walked in with nothing on file. The ones who built credit fastest all did the same things. Today, I am going to walk you through exactly what those things are. The information in this video is for educational and informational purposes only and does not constitute financial, legal, tax, or investment advice. Watching this video does not create an attorney-client, fiduciary, or advisory relationship of any kind. Stories shared are based on real experience from over 20 years in banking, including roles as a branch manager and district manager. Identifying details have been changed to protect customer privacy. Before we get into the plan, let me tell you why this matters. A credit score is not just a number for getting a loan. It is the number that decides what you pay for your car insurance in most states. It is the number a landlord checks before they rent you an apartment. It is the number that determines whether you pay 6% or 8% on a mortgage, a difference that adds up to over $100,000 over the life of the loan. A good credit score is not about borrowing money. It is about the cost of being alive in 2026. Every month you go without one, the system charges you more for the same things. The good news is that you can change this faster than most people think. 12 months, one card, one small loan, 3 habits. Let me tell you about a customer I worked with. She came into my branch on a Tuesday afternoon, 24 years old, first job out of school, credit invisible, meaning the bureaus had no file on her. She wanted to get pre-approved for a car loan and the dealer had told her no. She was discouraged. We sat down at my desk and I walked her through the same plan I am about to walk you through. 14 months later, she came back into the branch to thank me. Her score was 722. She had bought the car at a rate she could afford. She had also moved into her own apartment because the landlord finally approved her application. Same person, same income, different credit file. The plan is not complicated. It is consistent. That is the whole secret. Months 1 and 2 are about getting your first trade line reporting. A trade line is just an account that shows up on your credit report. You have 3 good options. The first is a secured credit card. You put down a deposit, usually $200 to $500, and that becomes your credit limit. The deposit is refundable when you close the account or graduate to an unsecured card. The second is becoming an authorized user on a parent or trusted family member's account, which adds their payment history to your file, the fastest path of all when it works. The third is a credit builder loan from a credit union or a service like Self. Pick one. Apply this week. The clock starts the day the account opens, not the day you decide. Months 3 and 4 are when something exciting happens. Your first credit score appears. Most monitoring apps will start showing you a number 60 to 90 days after your first trade line reports. It is usually somewhere between 620 and 660. I want you to pay attention to one thing here. That number is not your final number. It is your starting line. The score went from nothing to something. That is the win. Do not panic if it feels low. Do not apply for another card to try to boost it. The single most powerful thing you can do at this stage is keep your one card paid off in full every single month. On time, every time, full balance. 2 months of that and your score moves on its own. Months 5 and 6 is when we add a second trade line. Why 2 and not just 1? Because the credit scoring models reward credit mix. A revolving account, like a credit card, plus an installment account, like a small loan, builds your score faster than 2 of the same kind. If you started with a secured credit card, this is when you add a credit builder loan. If you started with a credit builder loan, this is when you add a secured card. You are not borrowing more money. You are giving the bureaus more data to work with. Keep using the first card the same way. Small purchase, paid off in full every month. The new trade line does its own quiet work in the background. By the end of month 6, most people are between 670 and 700. Months 7 through 9 is where the real optimization happens, and this is where I have to push back on something you have probably heard. The 30% utilization rule. Everyone says keep your credit card under 30% of its limit. The truth is that the FICO model rewards utilization closer to 7 to 9%. So if your card has a $500 limit, the sweet spot is keeping the reported balance under $50. Not zero, not maxed, about 1/10. Here is the trick most people do not know. The balance the bureaus see is the balance on your statement closing date, not the balance on your due date. So if you pay your card down a few days before the statement closes, you control what gets reported. That is how people quietly run scores into the 740s. Months 10 through 12 is the graduation move. By now you have a year of on-time payments, 2 trade lines reporting, and a score somewhere in the high 600s or low 700s. This is when most secured cards will let you graduate to an unsecured version of the same card. That returns your deposit and keeps the account open with all of its history intact. Do not close the secured card and open a brand new account that erases your oldest trade line and tanks your average account age. Ask the issuer to upgrade in place. If they will not, keep the secured card open and apply for one new unsecured card with better rewards. Do not apply for 3 or 4 at once. Do not let an excited mood at month 12 undo the patience that got you here. A few quick things to avoid along the way. Do not max out the card, even one time, even paid off the next day. The statement balance is what gets reported. Do not miss a payment. One missed payment can drop a thin file by 80 to 100 points, and the recovery takes longer than the damage. Set autopay for at least the minimum so you can never accidentally miss. Do not close your first card after you graduate. That is your oldest trade line. Keep it open, run a small recurring charge through it, and let it quietly age into the most valuable line on your file. And do not apply for store cards at the register because the cashier offered you 15% off. Each application is a hard inquiry. Each hard inquiry costs you a few points, and store cards are some of the worst products in the credit market. 12 months, 1 card, 1 small loan, 3 habits, pay on time, every time, keep utilization low, do not close your oldest account. That is the entire system. Not one piece of it requires luck or income or a perfect background. It requires consistency. The customer I told you about at the beginning did not have any advantages most viewers do not also have. She had the plan and she stayed with it for a year. 12 months from today, you can be in a completely different place than you are right now. If this video helped you, the next step is figuring out what your first card should actually be. I will cover that in the next video on this channel. Pull your credit report for free. You can do it as often as once a week through the official bureaus or use a free monitoring app and see what is actually on there. I will see you in the next video.